Last week on the euro dollar, we made a prediction that this market would come down into the 1.2240 level and we would have a nice bounce out of this market from that level. This week, this market pushed up over 150 pips from exactly where we expected. Last week here on the pound dollar, we had a market in a downtrend, just broke below the neckline of that head and shoulders pattern. We said we were waiting on the market to get back up to 1.4092. And at that neckline of our head and shoulders pattern is somewhere we would look for shorting opportunities to push this market down and break into new lows. In last week's prediction here on the dollar yen, we said that after the close of last week and the completion of this head and shoulders pattern here on the daily chart, signaling a reversal, that we would see this market head higher before turning around. And also in last week's prediction video, we predicted that the Aussie dollar would come down, retest our previous structure lows, and could get a nice rally from that level all the way up to the 0.777 area. It's exactly what we got. We also predicted that the 0.777 area could be resistance for this Aussie dollar. So what's next for this pair? That's something we're going to discuss directly after the intro and disclaimer. And guys, this is something that works not only for the euro dollar or the top 5 major pairs, but for every pair when it comes to making predictions. And that is the approach of top-down analysis that we try to teach you guys each and every week through these weekly market prediction videos. So if that sounds like it's going to be valuable for your trading, then I need you to do 2 different things. One, go ahead and click that subscribe button and the notification bell to make sure you're alerted about these videos. Also, head over to www.thetradingchannel.net and check out some of our other free educational material along with some of our paid programs. While you do that, I'm going to let the intro and disclaimer roll. Click that like button for me and I'll see you guys on the other side. All right, traders, so back here, we're going to start off on the euro dollar, and not much has changed for this pair. We are still in this period of consolidation. We've been looking at over the past couple of months now, in between 1.25 and 1.22. So with that being the case, the only thing that we're looking for out here on this high time frame is trades that are going to be bouncing off of support or bouncing off of resistance. We had one of those last week, just as we discussed before the intro. So what I'm going to do is play you guys a clip from last week's video talking about this bounce off support we had. And I'll be right back to talk about what we're expecting next out of this euro dollar pair and what we're expecting next out of the rest of the top 5 major pairs. So I'll go ahead and play that clip and I'll be right back. So for our initial predictions here on the euro dollar, our initial trade idea is that this market pushes down just a little bit further into the 1.225 area. And once we get down to that 1.225 area, we can look for long trades based on a bounce off of this previous level of support. So that push off of support is exactly what we got coming out of last week's video. And here on this euro dollar chart, there's really no way for us to estimate or to guess what this market's going to do from exactly where it is now. But that's okay, because that's not our job as traders. What our job is not to be able to guess exactly what the market's going to do at any given point, but to be prepared for whatever the market throws at us, to be prepared for whatever the market does. And so in this case, what we're doing is preparing for what the market does by saying that if this market gets up to the 1.245 area, if we can get a push into that major resistance area, then that's a place we can look for possible shorting opportunities, and above that at around 1.25 even, looking back at the previous highs of this period of consolidation. Something else that's possible and that could happen here on the euro dollar is another pullback into the 1.225 area. That being the case, we can look yet again for possible long opportunities from there all the way down into our most previous lows here. And of course, we get a break below all of that, then we'll look at our next support level around 1.2066 for possible support out of the euro dollar. But really, until we break out of this period of consolidation, we're just looking for plays off of support and resistance out of this pair. So next up, let's go ahead and move on to our next pair, which is going to be the dollar yen. Okay guys, here we are on the dollar yen, and before we get started with the analysis on this pair, throughout these weekly market prediction videos, what we're really trying to do here at the Trading Channel is help you guys to understand how to make predictions about what the market's going to do, instead of being in the mindset where you think that you're always going to be able to tell what the market's going to do no matter where the market is. Like we just looked at on the euro dollar. You know, if a market's in a period of consolidation and it's right in between, it's right here, let's say, in that period of consolidation, there's no way for me as a professional trader to really understand or know what that market's going to do from that level. When I say predictions, the whole point of these videos is to show you guys that making predictions means that you're waiting patiently for a condition to be met before you even attempt to trade. So what would an example of a condition be for the way we're trading during these weekly market prediction videos? Well, up at previous resistance, down at previous support. That would be an example of the conditions that we're waiting to be met in order for us to make our predictions, because the truth is, as a trader, you're not always going to know exactly what the market's going to do at any given moment. Again, our purpose is not to know what the market's going to do, but to prepare and predict based on conditions and a trading plan what the market's going to do. So another thing to point out is the fact that just because we have these levels pointed out as major levels of support and resistance, we're not just blindly placing trades every time the market gets there, because that can lead to blowing an account. That's not what we're doing here, and that's not the purpose of these videos. The purpose of these videos is to give you guys an extremely valuable skill. Of course, it's valuable to be able to point out levels in the market that very commonly act as major levels of support and resistance. As you guys have saw throughout these weekly market prediction videos, and if you're new, make sure to go back and watch a few of them. Using these levels to predict market moves can be a very valuable skill to add to your trading, but still, it's just a condition. It's just a tool in the entire tool bag that you need in order to build your trading plan. You can't build a house with nothing but a hammer. You need an entire selection of tools in order to build that house, and trading is no different. You need an entire selection of conditions and entry reasons, conditions and strategies, along with risk management plans, stop loss placement, target placement. There's much more that goes into it than just pointing out key levels of structure, but this is an extremely valuable skill that we try to help you guys improve each and every week with these weekly market prediction videos. But again, just really important to remember that this is not an entire trading plan. In order for this to become an entire trading plan, you need to match it with entry reasons, stop loss placement, target placement, risk management plan, money management plan, and much more. Last week we had a trade based off the entry reasons I'm talking about and based around an entire trading plan where we have a set stop loss and a set target in the EAP Training Program, along with a set risk management plan. And this trade ended up working out and banking us in over 100 pips. I'll put a screenshot of that trade to the left hand side of your screen. So that trade banked in over 100 pips, and it's just important for me to point out that it's not only because we use this major level of structure support. That played a factor in the decision making, in the prediction, and in the trade, but that wasn't the only part. That was a condition that was met before the rest of our trading plan came together and allowed us to actually place that trade. And guys, you can go out and use your own entry techniques, create your own plans when it comes to stop loss and target placement, risk management, and everything else included in a trading plan. But if you'd like to save yourself some time, then we offer some really advanced help with all of those, including the strategies and entry reasons that we use here at the Trading Channel in the EAP Training Program. There's a link for that in the description. Again, you can go out there and do it yourself as well. It's not something that you have to have a training course in order to accomplish, but having a training course there, having a mentor guide you through that process can make that process much easier and much faster. But now that we've talked about needing to add other things to these major levels of structure, let's go ahead and point out our major levels of structure and talk about what we're expecting out of the dollar yen coming into this next week. So we have another major level of structure that is formed. The reason is because we have 1, 2, 3 times the market has used this level as support and resistance. Now this market broke into new highs and pulled back directly to that level. We're currently just hovering around this level at 106.82, but we will be looking on lower time frames for possible entry reasons for that trading plan to come together on this dollar yen pair and give us a push up, because we are expecting this push up to come into the 108 area right here at this previous major resistance, combining that with these previous major support levels. So that's initially what we're expecting out of this pair, and if we get some kind of entry reason that follows our trading plan down here on a lower time frame here on the dollar yen, then we will be taking that as an opportunity to go long. Now, what else could happen here? We could see a push all the way back down to support, keeping us in an uptrend, because this market can be in an uptrend all the way back down to this support level, or in a reversal situation. This isn't really an uptrend yet, but it is a reversal situation we need to be looking out for. And we can stay in this mindset, we can stay with this long bias until this market pulls all the way down and breaks below 105.69. So 105.69 will be another good place to look for long opportunities if the market gets down into that level. And of course, our short trades this week, or our possible short trades, are if the market gets up into 108, between 108 and 108.2. That's an area in the market we'll take a look at for possible short opportunities here on the dollar yen. And that's what we're looking at on this pair. Let's go ahead and move on to our next pair now, which is going to be the dollar Swiss. Last week here on the dollar Swiss, we were expecting this market to push up, break into new highs. We had already broken into new highs. We expected a little bit more of a push up out of this pair to really break into some new highs and create this uptrend. And then a pullback into our previous levels of resistance is something that we were talking about and something we were expecting out of this pair in anticipation for trend continuation out of the dollar Swiss. Well, to this point, nothing has changed. We actually got exactly what we were looking for. The market is now pulled back into the previous levels of resistance that were just broken, pushing this market into new higher highs. Getting this pullback means that we're now waiting on lower time frames, and we've already gotten a trade. Once out of this pair, we ended up hitting our first targets and have now been stopped out for break even on the second part of that position, but we will be continuing to look for possible long trades here on the dollar Swiss around this level, because what we're expecting is at least a retest of this resistance level and possibly even trend continuation all the way up to 0.9684 out of this pair. And if this market gets up to 0.9684, that's a level we can look for possible shorting opportunities with a counter trend mindset here on the dollar Swiss. We can also look for those counter trend opportunities right back here at this previous resistance around 0.964. As for support lower down, if we get a break below this support level, we'll be looking all the way down here at 0.9648 on this pair for our next level of possible support here out of the dollar Swiss. And that's what we're taking a look at on this pair. We'll go ahead and move on now to our next pair, which is going to be the pound dollar. Okay, traders, so here on the pound dollar, we had a fantastic prediction that worked out really well last week. We talked about this market coming into a reversal situation because of, one, our previous level of daily structure looking left. Right now we're on a 4-hour chart. We had that. Including that, we also had a nice head and shoulders pattern with a breakout to the downside. Now we know with these conditions met, the neckline of this head and shoulders pattern is a great place to start looking for possible trading opportunities to the downside for trend continuation based on this head and shoulders pattern. This market then pushed up and gave us exactly what we're looking for with trend continuation, breaking into new lows exactly as we expected. I'm going to play you guys a really quick clip from last week where we talked about this scenario, and then we'll come back to talk about what we're expecting next here out of the pound dollar. So let's take a look at that clip and I'll be right back. And other than that, we're looking for a pullback up into 1.410 for a possible shorting opportunity here out of the pound dollar. And that's so that prediction again working out really well from last week, giving us over a 100 pip drop out of the pound dollar with just this one red daily candle. Now after that, the market pushed back up, breaking above that major level of resistance, and has since then pushed all the way up into our next major level of resistance, or getting pretty close to that level at 1.425. This is the next area we're going to be taking a look at here on the pound dollar for possible trading opportunities. Right here at 1.425 is a level we're going to be looking at for possible short opportunities once again. And other than that, the market could turn around right here and push down. If we get that push down, then 1.4092 is definitely a place I'm going to be taking a look at for long opportunities out of this market. Now, below and above that, you can take a look at the charts and see what we're looking at below that. Support levels looking around 1.3906, and our next level of resistance around the 1.44 even handle if we can get a break above these previous highs looking left here out of the pound dollar. But that's what we're looking at coming into the future here on this pair. The next pair and the final pair we're going to look at today is the Aussie dollar. Here on this pair, another good prediction from last week. We expected this market to pull down into 0.76 after touching resistance at 0.7715, getting down into the 0.764 level. Then we expected after a touch of that level a nice bounce out of the market. We said it could come all the way up to 0.777, which is exactly where the market's hovering around now. So with that being the case, what we're going to be waiting for here on the Aussie dollar is to see if we can get some kind of entry reason on a lower time frame around this level that can give us a reason to go short on this pair. Now, the reason we're looking at this level and expecting it to become possible resistance is because of these previous levels of structure. This market used this level of support once, twice, and resistance once. And now that we've pushed back up into that level, we can't help but think that the market could possibly use this level as resistance once again. Besides that, or even if we get this push down, the next trade we'll look for is a possible long trade off this previous resistance level that was broken on a lower time frame around 0.7715. It's a good place for us to look for some possible long opportunities out of this pair. If we push above this resistance level, then the next resistance level we'll be taking a look at is 0.78 even for possible short trades here out of the Aussie dollar. And again, you can see on the chart that we have other support levels pointed out at 0.764, where we found support last week out of this pair, and another resistance level up here at this previous highest high looking at 0.7881. And that's what we're predicting coming up out of this Aussie dollar pair. So again, guys, just want to reiterate that we're trying to provide value by helping you guys understand how to make predictions in the market, predictions on the levels that are going to act as major support and resistance. So I hope you found it to be valuable. If you enjoy this type of training and you currently feel stuck, like it's impossible to improve your trading or like it's impossible to become profitable, then I would like to offer you training that's a little bit more advanced than anything we go over here for free on YouTube, and that can really set you on the right track to helping you improve your trading and ultimately becoming successful in this industry. Comes down to what you know. So if you would like to know the more advanced techniques that we use in our trading on a daily basis, you can take a look on your screen to see what's all included in the EAP training program, which there's a link for in the description below. I'll also put a couple of testimonials somewhere on the screen from previous and current members in that program where they have willingly offered their opinion and their feedback about the EAP training program. So if you're interested in learning more about that program, you can just click the link in the description labeled EAP Training Program. If not, that's okay too. Just make sure that you are at least subscribed here to our YouTube channel. Click that notification bell so that you're alerted every time we come out with free content. I think we're up there with the best of Forex educators when it comes to the free content we produce and the value we provide in that content. So if you agree with that statement, click that like button for me. Make sure you're subscribed. I wish you guys the best of luck in all your future trades, and I'll talk to you in the next video.
My mind is breathing in. Break out, I've got to see. Spent all my life holding all of it closely. I played it innocent, a feel of discontent. I'm finally facing it all, fearless. We'll be right back.